Okay, good evening, everybody. Hope everyone is well. Hope everyone is good. And of course, because I can't say what I'd normally say, all I will say is welcome to 2026. I think we've passed the 6 day threshold now of, congratulating everyone on making it through 2025. But I do thank everyone for tuning in again. And let's just start off by saying, look, if 2025 wasn't the year that you potentially thought it was going to be for you, don't worry about it. It's done now. We're into 2026 and we've got 359 more days to take that opportunity and to make something for ourselves out of this space. And look, price doesn't have to go up to make money. There's opportunities that can be made in either direction or when it's moving sideways. So, I'm going to touch on that a little bit later on, but whatever happened in 2025 for yourself, good, bad, indifferent, let's put it behind us, learn from it if we can, and just roll into 2026 with some optimism. Not necessarily optimism about the price, but just optimism in ourselves as actual traders and people within the crypto space and actually making something from that one. So hopefully that's a little bit of a pep talk to start 2026. And as for tonight itself, I'm kind of going to treat this like a bit of a Friday charting session, if I'm perfectly honest with you, because I've been away. I've not really stayed in contact with a lot of the crypto news over the Christmas period. And I'm not going to stand up here and try and pretend like I know what's been going on in Venezuela for the last couple of decades and have any sort of authority in talking about how that's going to impact it. All I will say is the markets haven't really seemed to have reacted that badly. Donald Trump has said that they're going to send in American companies to help dig that oil. And if any of you that have read Confessions of an Economic Hitman, you're going to know exactly what play is going to go on there. But that's a long-term play from itself. So that is kind of that. So what we're just going to do is we're going to kind of just stick to the chart, stick to big picture to start off with, have a look at how things are developing on the smaller time frames, Bitcoin, BitTensor, maybe a few of the other things out there, cryptos, sorry. And then I'm also going to try and talk, as I mentioned earlier, about opportunities that we can try and find over the next 359 days until we see 2027 and already talking about it. So without any further ado, let's just jump onto, I've messed up with all my stream deck. There we go, the charts. And actually, these charts here, for me, matter of fact, the two main charts, Bitcoin on the top, BitTensor on the right-hand side, give us a clear enough picture as to what has happened over the last 6 days, in my opinion anyway. But for those of you that actually took some time off over Christmas and went away from the charts, one of the things that I do want to focus on with Bitcoin 3-day time frame, as you all know, is we sort of hugged that 87,000 level. But one thing we actually did is we kind of just smashed one that we didn't smash. We drifted through this short-term resistance line from the all-time high that had pretty much been batting us down. And we didn't make any real noise going through it. Quiet period over Christmas, not that much volatility around there. We're hugging the bottom of this channel between 86,000 and 93,000. But actually, when the markets reopened in the new year with some new sentiment, a bit of pep in everyone's pencil, whatever terminology you want to use, we found that the markets, including Bitcoin, actually managed to climb up. And classic Avenger call time frame, 12 o'clock today, I was a bit of a different story as to what I was talking about. But it's still a positive move that we've actually had over the last 6 days. We've gone from 86,500 all the way up to over 94,000. Last day, we have sort of pulled back, currently sitting around about 92,500. But you can kind of see all we've really done is work this range. And we will come back into this range on the lower time frames. But we've sort of accumulated down on the bottom. We've seen a nice strong move up there. We've tried to dip our head above 93,000. There's other things at 94. And we've come back down into it. And okay, we don't know what's going to happen now. We need to sort of let this candle close in 4 hours' time, see how it develops. If we can't clear 93,000, well, the last 2 months have kind of told us where we're probably going to end up going, or at least heading down towards. But again, it doesn't necessarily mean that that is a bad thing. Now, Bitcoin has woken up, but actually so have altcoins. And I'll show you Bitcoin dominance at the moment. We are making lower highs on Bitcoin dominance. That's a good sign for altcoins. We're actually starting to turn the corner. We still, in my opinion, need to break that 57 level, but we have made lower highs. We didn't quite make it there. Failed, that M formation, right-hand side lower than left. Nice to see. And if altcoins continue doing in their thing over the next few days, again, could have a good move down there. And depending on which altcoins benefit from that, we could see a nice move across the board. Kind of reflective in total too, but I think this is pretty similar for just total market cap as a whole. The most important thing is over the last 3 days, well, the start of this year, should I say, we were below this 1.25 trillion line. We rallied up to it over the first few days of the new year. And then this week, we've actually seen ourselves climb above it. 4 hours to go. We're sitting about $50 billion above that level. Now, similar to sort of Bitcoin, it's a level that from the wicks, we've kind of struggled to get past that 1.3 trillion. But we're kind of there. We kind of need to let the next candles develop through it. But all promising signs to see that we are above 1.25 trillion. One day I will correct that line back down to 1.25. But anyway, standard it is. And with BitTensor, so a strong move. Okay, we had some pretty low times leading up into Christmas, down to $200. But actually, over the last 6 days since the start of the new year, BitTensor earlier on this afternoon was up over 30%. We're sitting in and around about 27% at the moment, but nearly an $80 move from the lows just prior to Christmas to where we find ourselves now. And I haven't touched these yellow lines. These yellow lines have been there time immemorial. You know, I kind of moved them around a little bit, left it there. We've strong rallied, recovered the drop from mid-December. And what we hit into today is this support and resistance line here, which, okay, 3-day time frame, it's not the most accurate, but you can kind of see that we have had a history with this level that we're interacting with. And that's exactly where we find ourselves, just catching a breath. And you're going to see when we go on the lower time frames that actually moves like BitTensor and other gold coins, we're talking some of them 80% in the last 7 days. They're going to need to catch a breath. Otherwise, it's highly likely that we're going to see a full recovery of that. So don't be afraid of pullbacks at the moment. You know, look to try and take advantage of those. We'll get into lower time frames a little bit later on, but we'll kind of show you the usual chart. Matter of fact, no, let's go to we're going to stay with higher time frames. We might as well stay with higher time frames. Here is the 12-month candles, so the yearly candles for Bitcoin. I'm going to have to zoom in here, and you know what I was just trying to point out when we zoom in close enough. See, earlier on today when I did this, we were going to have done better than the whole of last year in sense of the body of the candle open and the close. But we've just fallen ever so slightly below that at the moment. But hey, we're 6 days into it, 359 days to go, but we are green in 2026. So let's try and maintain some form of positivity, at least for the next 10 minutes as we roll through. But all joking aside, down onto our usual 12-hour time frame at the moment. With the yellow boxes, as everyone knows, there's sort of the higher levels, sort of higher time frame liquidation heat maps that are just overlaid onto my chart. We had one here at 91,000 that we rallied up through into. I've turned it gray just so you can see it from a historical point of view. But where did we actually turn around? We didn't get into the 94.5 liquidation levels. That was short liquidations. The sellers stepped in, started selling again, saving their bacon there, if you will, but actually a fairly good rejection from that at the moment. So very well defended. And again, you know, a fairly strong move over the last sort of 4 or 5 days. We kind of do need some form of pullback. We'll see if there's any EMAs or anything else that are going to try and help us out with that on the way back down. We've got a fib level at sort of around about 88.5. It's kind of taking us down to the lower levels of those support levels I was talking about before. But we can actually see that there's some long liquidations that have just started to be built. I don't know why I didn't put my labels on here, but at basically 86 to 87,000, which is the base of this here on the 3-day time frame we showed beforehand. In terms of everything else on this, there's not really too much more to say. We're still within that ranging pattern. We're still finding moves up, but we're then also finding those moves back down. And as I said, from this turnaround here, we are starting to drop back down. We have had a little bit of a fight back over the last couple of hours from the drop down to 91,000. But I think, again, need to give this one a little bit more time just to play out in where that's going. And yeah, I didn't really expect many people to tune in over Christmas. I'm just sad and like to, you know, keep looking at the charts. I put some content out there, But I came and spoke to you on the 30th of December. Well, now Q4 2025 has actually happened. We can see 23% down in what was supposed to be our blow off top session. Not quite the place there. Funnily enough, although we were 23% down over the 3-month period, we actually found our all-time high ever for Bitcoin within that period. And I think history will lose that because we'll just look at Q4, or we'll look at, November, October, November, and December when we look at on the monthlies as red months. I think history will forget that actually in 2025 that was the all-time high of 126,000. So it's funny how that's going to be, but we can now see on the monthly timeframes we're moving into January. Certainly over the last sort of 6 years, we've had 5 out of the last 6, not including this year, months has been green, fairly strong greens as well. And of course, it's hard to really get much trust in this at the moment, particularly how the end of last year worked. But January and February, typically very strong months for Bitcoin as, the markets, traditional markets, risk on markets start to come back, money starts to flow into it. We start to get that confidence coming in. We now look at Bitcoin on the weekly time frame here. And again, there's nothing really wrong with what we're seeing at the moment. Matter of fact, there's a lot of similarities with what we saw back in April or May. We sort of rallied up off the Trump election win, set an all-time high, dumped aggressively down, ranged for about 8 weeks, and then found our spark again and made a new all-time high. We've made that all-time high. We've dumped a little bit there on economic news and everything else, but then we've managed to sort of find some sort of stability, and we're just waiting to see what the next step is. Is it going to be that, or is it going to be that? And let's focus on the first option at the moment. Now, let's take those away. What is kind of interesting, which is clear at the moment still, is from 2023, we are still in an uptrend where we are making, on the weekly time frame, higher highs and higher lows. So as bad as this pullback has been, we haven't actually broken the cycle trend at the moment, and it's going to be painful. If we really want to consider that, we have to get below, what's this going to be? 78,000. Then a candle closing below that. Then we can start talking about a break of trend. Then we can start talking about, has this actually sort of broken? But until then, history's kind of rhyming a little bit here. We're seeing similar periods of consolidation before moves up. And okay, the time frames can be indifferent in terms of what we had back in 2023 when we ranged for around about 6 months, 9 months in 2024, and then a couple of months in 2025. And we're kind of, bookending 2025, 2026 with a couple of months at the moment. We haven't seen which direction that is going into. Now, it would be remiss of me to say, look at what we're seeing here without sort of also pointing out some similarities I talked about last time as well, which is when we look weekly time frame here, but we look at 2021 as well. So I'm trying to get them both on the screen for you. Still make it. We sort of rallied up. We made that first high. We saw that pullback. Then we consolidated. A new move up, came back down. Period of consolidation where everyone thought we were going to rip it up. And then actually we failed and we went into the bear market. So you can see that is what happened through 2021, 2022. We now move to, oops, you're going to have to lose some of that. We now move into where we are through 2025. Again, what was predicted to be another blow off year. We had that all-time high, rally up into it, set there. Then we had the drop back down, which scared them day out, everyone. Bit of consolidation in there. Then it reversed to make a new all-time high, having that pullback, another period of consolidation. Obviously, what we're hoping macroeconomics and the environment's going to do is it's going to break that trend, and we're going to go that way, and we're not going to have history rhyming and actually see this as a bit of a failed rally and a point back down there. But it is remiss of me not to at least mention that and say, if people are going to talk about patterns rhyming and similarities and everything else, we've got to look at the good and the bad at the same time. That's definitely a possibility. You probably can't see that much because there's so much yellow on the chart. Hopefully you followed along as we went. I should have just pressed delete. Anyway. Okay. Sorry. Just get rid of all of that. There we go. Now, On the weekly time frame, seeing as we're talking about it, we have to talk about my biggest concern at the moment, and that's this. So we've got the blue line, which is the 50 EMA weekly time frame. We've got the red line, which is the 20, I think, might be the 21. Pretty sure it's the 20 though, EMA. And for the last 2 months, below the 50 EMA, cause of concern for me. Always wanted to see how that kind of played out, but it doesn't really happen for long periods in a bull market. History has kind of shown that. And so we are cautious. We're not leaving the market, but we are cautious. Okay. And that's how I am at the moment. That's how I've just been built. I'm cautiously looking at how the market is developing. I'm liking what I've seen over the last week. Got no qualms with that, but I am cautious as to how each pump ends. And the next thing that I'm actually seeing is that 20 and that 50 EMA. They are at a point where they almost crossed, and that has never happened. And we've managed to stay in a bull market. That is always a confirmation of a bear market. Now we're very close to it, and so we've got to try and find a way to break that cycle. And this is the cycle for breaking things. People are believing that this year's the year, and the last year we broke the 4-year cycle. So if that's the case, this should help us prove it. But either way, what we do see on these previous ones, so those of you that didn't follow the videos, 2 videos over the Christmas period, is that we should at least see this rally up to the 20 and the 50 EMA, which is not that far away from where we are right now. We're probably talking about another $6,000. And for me, that's the next real big test. We can have a look at levels in a moment as to what that can do. But just from a psychological point of view, rally into it, absolutely fine. We were expecting, remember when we throw on the Wall Street cheat sheet, kind of psychological cheat sheet, whether we're in the thrill stage and then we're waiting for that pullback into euphoria, or we've dipped past euphoria because it wasn't that euphoric, and we're actually in that complacency rally. Well, this next rally, and I've been saying this for ages, is going to be the proof in the pudding there. So how does this next rally end? This next rally fails to make an all-time high, and that's, we're asking a lot of it, I get that, but it fails to make that all-time high. I think we have to accept that we're on the potential breaking that trend there. And the first test for me, so many things tie into it. It used to be 100K. We've had to drag it out. It's going a little bit lower. But that sort of period, or that sort of price range between 96 and 100,000, where the 50 EMA and the 20 EMA are going to cross, where we've got psychological levels entering into the 6-digit regions, where we've got vector candles that need to be recovered, where we've got significant previous support and resistance levels. That is, for me, the first real indicator. And even if we get through that, whilst I'll be happy and I will post in it and say, yep, we've done it, tick, well done, everyone, pat on the back, ultimately, I'm still cautious. I have to be cautious just in case it doesn't go that way. And it's not me being negative, and it's not me necessarily being particularly bearish. It's just me being cautious, wanting to be proved wrong, but ready to react if we're not. And so that's where I see this next battleground being. And if I get rid of this yellow line now, so we can actually have a bit of a clear look at it, we're talking 98,500 for where this crosses. And again, previous cycles, it has crossed higher. Where it crosses here, we break through it, but we fail. We go back to, it broke through just prior to it, then it failed at the cross back in August of 18. And then if we go to over here, okay, broke through for far earlier. Kind of rallied up to the 50 EMA, didn't quite get through it because we're already on the way down. But again, never a good particular sign. So in the last 3 cycles of this occurring on a weekly time frame, it's been an indication we don't get through it, we're going down. Treat that as you will. Now, that being said, what we have seen over the last few weeks, because the markets have been quiet, because it's been a bit of a weird time, we've seen the fear and greed index actually stabilize. We are out of extreme fear. We didn't get out of extreme fear for like 30 odd days. Now we're sitting pretty much in mid territory. But it was yesterday's pump, the day before yesterday. It was yesterday's pump, the day before yesterday. I know, because these reset at 12 o'clock. So Sunday we were at 26, just outside of extreme fear. So finally broke out that range. But then yesterday's movement, markets coming back in, not really reacting to the Venezuelan news, the Greenland news, or Colombia news, or anywhere else that Trump threatened. the market's actually got all the way up to 44. Now, we'll see how that one resets here. But it's just good that we have at least some positive sentiment. As I posted in Discord earlier today, Bitcoin has actually outperformed, and it's only been 6 days, and it's not even been 6 trading days, but it is currently outperforming what it was, the S&P, the NAS, gold, and a few others. It probably isn't now, but that is reflected in where we're going. And actually, again, no real sort of benchmark here, but the last 2 days that we have seen ETF flows, they have been inflows, significant inflows, nearly 500 million, and then nearly 750 million. So 1.1 billion over the last 2 tradable days. I don't know how today's played out at the moment, but money is returning. Institutional money back off the Christmas break is returning into crypto. And we saw not just from late December all the way through December, generally institutional money was leaving crypto. New year, new opportunities, money seems to be coming back in. I'm not even going to play the cards about market makers and selling when price goes up. Just looking at the raw facts, institution seems to be buying at the moment, which has always been a good sign during Bitcoin's reign of the ETF. Sorry, rattling on 20 minutes. Okay. And this is kind of just CoinMarketCap. I've effectively just filtered it for 7-day progress. And what we can kind of see here is altcoins have been doing very well. So Render, Virtues, meme coins, Artificial Superintelligence Alliance, or FET as it used to be, Pump Fun, we got BitTensor, we got SPX 69,000. AI and memes have done very well the start of this year, which it's good for those of us in BitTensor, or I don't actually know how Alpha's doing against BitTensor, so forgive me on that one. That's kind of my position on it. But generally, we've seen the AI sector has worked very well. And again, I don't necessarily want to just dive straight into AI and crypto and potential AI bubbles in the markets. This AI bubble that people are talking about in the market, what we can actually say is that the big players, the big institutions within the AI, so not just people just sticking .ai at the end of their web address or whatever, they are actually making money. It's not like NVIDIA isn't making money, not like Meta or Google or whatever. So there's definitely, doesn't feel as bubbly as say the .com in my opinion at the moment. But for whatever reason, AI and crypto has woken up. Render, again, incredible, 88% over the last 7 days. So looking very good in terms of that. I'm just scrolling down to see where Bitcoin features. So we have to go all the way down to the 75th position. I mean, still up 4%, 4.5% for Bitcoin, decent. But what is interesting is despite that, alt season actually only sits at 23. Tomorrow, I think we might see this jump, but it is reflective over the last 90 days, I suppose, so maybe that's why. But technically, despite alts doing well over the last 7 days, it's still classed as a Bitcoin season for now. I think we may start to see that number move up as we continue through it. Right, let me just have a quick drink. And then we'll get into some lower time frames. And I will just leave the RSI on for the moment, but I'll try and minimize it or something. Just not waste too much of your brain cells looking at that. But now, Bitcoin though, daily time frame. And as you can kind of see, actually, let me go back. Oh no, I'll do it on this one. It's fine. You can read charts. You've seen this one enough. It's not going to overwhelm you too much. But so there's that trend line we talked about, which we kind of just meandered through, and it looked like on the 3-day time frame. But what did we see? We drew up and we actually broke the 50 EMA. What candle have we got on the break of the 50 EMA? It's a green vector candle. That is what we need on the daily as well. How powerful is that? So there we go. Get to the top of the cloud, and what do we see? Bit of a retrace today. Only back to the 50 EMA, actually. Now, okay, I'm not necessarily here to say that's it. We're definitely going up from here. Maybe we fall back a little bit further. But the fact of the matter is we broke through one of the most significant EMAs that we traced throughout it on one of the most powerful time frames with volume yesterday, got through it. And we haven't broken through the 50 EMA since the run up to the all-time high at the beginning of October. So a strong move there. Let's see if we can maintain it. But even if we don't, we've got things like the 50, the 10, the 20, in pretty close proximity to buy ourselves back. And like I say, a pullback to any one of those isn't the end of the world. Don't throw the baby out with the dishwater. Whatever that saying is, if we start to see that move back, we've gone from 86,000 up to 94. Obviously, people are going to start taking a little bit of profit, try and build themselves back in. But let's just talk about the fact that we stay above the 50 EMA. What do we have in our remit? Well, we've got this beautiful red vector candle right here to try and entice ourselves up towards it. Now, it starts to run into those levels we were talking about, 96,000 to 100K. We've got those vector candles that we need to deal about. We've gone to lower time frames. We're going to have things like the 800 and the 200 EMA in our way. But on the daily time frame, the 200 EMA is at 100K. It's very important. Okay, so we need to consider how that's going to impact us. But if we were to draw a little line on here, this is where the current 50 EMA on the weekly time frame sits. I'm $100 out, forgive me. So right smack in the 50% of what's left of that vector candle, I would suggest somewhere, again, assuming that we find a bounce, whether it's 10, the 20, the 50 EMA, the bottom of the cloud, whatever, we start making that move back up again. For me, the real battle is still in and around there. That 200 EMA in the daily time frame, the red vector candle, the 50 EMA in the weekly time frame. And as we go down to the 400, you're going to see some more in our way there. I think there's a real big battle. Again, we start breaking over those, we can start having conversations again. But for now, let's just wait and see how this plays out. We'll talk again on Friday. If we've got above 100K, I'll bring the beers as well, and we can have a real conversation about what we can look for north of that. But until then, I think that's where we need to sit. Now, one of the things I wanted to mention, I forgot as we were doing it, was this. And we kind of talked about it on the 3-day time frame, but just on the daily time frame, I can actually get a trend line. Oops, not that. So I'll tell you what, let's just hide a few of these. Just for now. Just while we're having this. I know you can all see it anyway, but again, why did this thing turn around where it turned around? Well, we're still within this channel here, and yes, okay, it's ever so slightly is a higher high on the open and the close. It's great keeping that channel going, but what have we just failed to break through today? It's just the top of this channel. Now, okay, that might mean we end up coming back down here, and if we do, we start to worry that we lose that level again. Absolutely. This is where we play the game with that volatility and that ranging, and where do we decide we're going to try and take a little bit of a sensible portion of our pot out of play, should we present ourselves with an opportunity to get back in? That's a conversation for another time, but we've got that there. But we also can have a look at, we've come back down, we've formed this sort of like base, this bottoming pattern. Okay, and what are we actually at the double bottom? We're just at this, we're at the waistline, if you will, the bum line. And so, okay, if this is going to be our next move through it, maybe it takes a candle or two. If we can just get above, start to flipping out support, we can have a real conversation, as I say, about getting towards that 98,000 and start to sort of really build and break through some of those levels that are concerning me, if not you, in where we can go. So I think, yes, okay, we're still, I get it. We talked about it ourselves last year. Is this a bear flag that is coming down? And, we shouldn't really be talking about it in anything other than, where can this lead? I get it. But until we break it, is there any point worrying necessarily about that? When we get down to 86, we can have conversations about where it's going to go, but they're going to be very same as what I talked about at the end of December when we were down at 86, which is that sort of 82 level and then down at 77. So until we see that, we might as well just try and focus on what's it going to take us to get through this, and getting that green vector candle on the daily time frame through the 50 EMA is a positive step forward. It's showing that there is volume, that buyers are back. And looking to try and push that price up. So again, I don't really have a problem with that. Let's get rid of these. We'll put the indicators back on. We'll drop down onto lower time frames, and we'll go from there. Sorry, let's just click that on, click that on, click that on. Okay, right, let's drop on now onto the 4 hour, and I am going to start to bring in the RSI. Can you see now 800 EMA is at 99,000? So that's this, I'm pointing as if you can see where my finger is. That's this line here. Okay, so that's one of these other ones in that sort of pack between 96,000 and 100K, which is certainly something to just at least think about. It's actually about 98.8, but anyway. But on the top 4 hour, again, we've made that move up and through. We're using now this 10 and this 20. To be fair, the 10 mainly, and then this 20 as a bit of support. And we've had this strong move down just after the opening today. Well, maybe we just have that pullback. Maybe we get to 93, back to that 10 EMA. We start to have that discussion. But for me, is it on the 4 hour? Perhaps it's not. Must be down on the must be on the hourly. This was what was concerning me, was we were seeing this bearish divergence. And actually, it kind of feels like the hourly has flushed it out now. But we had sort of a move down there. And this move up here, we were continuing making highs. And I was just thinking, at some stage, we're going to see that reset. And actually, look, we've come all the way back down to oversold. So we have kind of flushed that out. I wasn't really tracking this afternoon on the 1 hour, because I don't know why I thought it was on the 4 hour. But anyway, we're starting to maybe see this reset here. So again, on the 1 hour, we are below the 50 EMA. We came back down there through force, but we left nice vectors behind us to ultimately try and pick that up. 50 to 10 to 20, they're all on top of each other in and around 93,000. So I think that's a nice battleground on the low time frames, an opportunity for, just seeing how we react there and positioning yourself accordingly from that one. But sorry, going back onto the 4 hour, and I'll minimize this again. We'll get rid of that. We've still got, we've had this strong run up, okay? And we talk about it all the time. We need opportunities to refresh. And okay, yeah, we whipped down to close to the 50 cloud, but actually it's just a retest of the 20 EMA currently on the 4 hour time frame from a body to body point of view. And we've left some nice vectors in our wake to sort of magnetize ourselves back up into it. And even if we cleared both of these, it doesn't actually take us into that 96 and above zone to cause us concern. But what it would do, and we like to clear vectors, we know that. I mean, look at everything below, and everything you can see to the left is a month's worth of data. And we haven't left any vectors there. So we like to clear those. But if we go back to this chart, that area that I highlighted with the vectors is this. This is it. Yeah. So we've got a target for market makers to move up into there, to sell into that, to clear out those that wanted to short, and then they can place their position. So there's that element to it, but it also acts as a magnet there. So we've got, I think, at least a magnet that can help us pull us up. It's going to get us closer to that zone that we talked about earlier in terms of knocking us down, but that's part and parcel for it all. Drop onto the daily and we'll move over to our bread and butter with BitTensor. And that randomly drawn uneven line that I drew turned out to be an absolute belter in terms of support. But the real line is the actual straight line down at the bottom, which is where we whipped down into, finding us bottoms here on what, Christmas Day was that? No, Christmas Eve. And then from there, just ranging in around that sort of 220 level. And again, look how strong this move up has been. I've shown you how strong AI has been as a narrative over the last 7 days, and BitTensor has amplified that. Again, daily time frame, green vector candle through the 50 EMA, everything you love to see. I do worry about the steepness of it, but then again, that's how steep we fell. We have just recovered in the same amount of days what we lost. And where are we finding ourselves having that battle again? We're not quite there at the moment. We're getting close to the 300s. And then, as I mentioned in Discord, this Gandalf line is sort of about, I say 315, 316, however you want to look at it, 800 EMA there as well. It just is going to be an important thing. And I think, can I see a reset on BitTensor? Yes, I can. We'll go on lower time frames. But assuming that the trend continues, and that's what we will until it breaks, 315 is what it's screaming out for. And I think there's an opportunity to be had at 315. Unless we get another green vector candle to get through that 315 level, it has played such an important role. And as Alan pointed out, for the last 11 months now, I think that's going to be a real interesting point for us to get through, particularly with the 800 EMA. Such a powerful daily EMA there. 200 is just above it as well. But let's not beat away from the fact that actually, for a lot of us, getting in at 220, whatever sidestep you got back in at, if any of you are lucky enough to get down at sort of the 210, 205 level, well done. And then being able to ride a lot of this up. I'll be honest, I sold some yesterday. Not a massive amount. I sold some at this rejection, the 50 EMA. It's gone back up. I'm happy with it. If I need to get back in, that's fine. But I do think there probably is some overheat that just needs to, be taken off the charts at the moment. If we now pull up the RSI, I want to find where that is, and we drop onto the 4-hour time frame. Maybe it was. Here we go. Again, a lot of lines on here. It's going to look a bit messy, but bear with me. I'll just get rid of these. We don't need them for now. So again, bearish divergence. And we have this. So remember, bearish divergence, we are making lower highs on the relative strength index. There's not as much power, positivity, buying pressure, whatever, coming into the market. And yet the price is getting higher. Typically, there's no time frame on when they break, but they do usually reset. And this one's been going for a while. We can see the climb there. And for me, 4-hour time frame was such a decent level chunk of the RSI to go. I can quite easily see a reset back down to the 50 EMA on the 4-hour time frame, 250 kind of level. And again, don't worry if necessarily that's where it is, particularly to 250 and so the 50 and the 200 are about to cross each other. Find some really good support from that there. But that to me is why I'm looking at. It's kind of yesterday with the decision of, we've had a nice run. I'm going to sell a little bit just in case it breaks it early. It didn't. Learn a lesson there to perhaps actually just wait for the confirmation. But it's hard just playing, RSI divergences on their own, because there isn't right, we're at the apex, so that's the trigger point, or we've crossed that price, so that's the trigger point. It's just okay, it's happened. And so there is an element to sort of guesswork, I suppose, ultimately with that. But, taking that aside, so let's get rid of the RSI. I'm not going to use it for any of the others. Although, if you are into that, a lot of the altcoins are showing you, and what I should say, the thing that you can then do is you can go on the hourly. We've got this divergence as well. You've got to extend that line. I mean, I can't extend it because I've just got to do that, but you've got this line extended there too. You go down the 30-minute, it still plays out. You just got to, I can't do it, but you get the picture. Why is that tip not showing? A little tip there. And it goes down all the way to the 5 and the 15. So it was on quite a lot of time frames, kind of suggests that it's certainly building towards that. Anyway, back up to the 4-hour. Let's get rid of this. I'll get rid of that as well. We'll get rid of this. But again, this move up has actually recovered a lot of these vector candles from the beginning of December. Yes, we're leaving some in our wake. We've got to obviously be cautious of that. But we've cleared, all of this level. We've managed to get all the way back into the noise where we were at the beginning of December. And again, getting back above the 200, the 10, the 20, the 50 and the 200 are just about to cross over, realign themselves in the pattern we kind of like. Obviously, the 800 is the battleground. And the 800, not often this happens, but the 800 on the 4-hour and at the daily is pretty much at the same level. It was 316 on the daily. We're currently looking at 313, 312 on the 4-hour time frame. So showing a real important level up there. There's no vectors for us to get there because we've ranged for so long in these levels beforehand. We cleared them all out. So maybe we're just going to make a bit of noise. And, the way AI has gone over the last 7 days, don't think we have to go straight back. Maybe we do continue up before we have that pullback. I mean, some of the other ones have showed some great strength. As long as we're using this 10 EMA, then why not? So maybe just marking the 10 EMA as a bit of an indicator for where you think it may end up going towards. I don't think there's anything really to see on the 1-hour. I've not really been doing anything with Zcash, kind of ranging sideways. I haven't been doing anything with Pippin. I kind of feel like I want to get into a long on this one. I mean, daily and 4-hour. This is quite oversold, some strong levels there. I think there may be an opportunity to do that. Have a look at some of the other ones just on the daily time frame. So BNB again starting to curve back through. Didn't break through with a 50 EMA with a vector candle, but we are the other side of that 50 EMA for BNB. We got through this. It's on Ethereum now with a blue vector candle, still a vector there. We're building blues off that one. Now we do have. This has always been a bit of an issue. We do have the 200 EMA at about 335, but this looks far better than Bitcoin's did. If you just bear with me while I delete this. So bearing in mind the 800s kind of uses as a bit of a base there, but this looks like a much better W than Bitcoin's was. Everything's kind of lined up the right way. Left hand side this drops a bit further than the right hand side. We are at the neckline at the moment, so we do need to break through that. I'd argue that let's just call the neckline the north of the 800 EMA, as I said, about 3350 for consideration there. But there we go on that one. Not really worried too much about Link and Near and Sol. XRP had a strong move beginning of this year, but maybe giving us a bit of a precursor as to what's happened. Hit that 200 EMA very nicely there. It's 4 minutes of quite a strong rejection from that. We have got those vectors that it's starting to eat into, but I would suggest if it's not clearing that, then taking out part of this blue vector candle down to the 50 EMA, sort of just below $2.10 would be where I would be looking for that to come down and to settle towards. Is there anything else? I mean, ETH BTC isn't really giving us too much. Yes, we've seen the last 5 days, it's gone generally up, and that's reflective in the Bitcoin dominance chart as well. But still trending downwards. It's not quite got back to levels that it was during October, November. And yes, there is a potential W, a bit like Bitcoin's, I suppose. But we've got this outlier up here, which is a bit higher than some of the other things we've seen on Bitcoin and total market cap charts. In terms of some of the other markets, VIX is pretty low, so not too much volatility. I suppose not to be expected, not be expected. Double negative there in terms of just where we are in the year and people kind of getting back into things. Dixie, a little bit of a climb back up, after Christmas, and maybe off a bit of a news of some American air power being used. Nasdaq, S&P, and they're not back at all-time highs, but the S&P is pretty darn close. In fact, actually, stand by your beds, it might have made it. It has. Excuse me. Yeah, the S&P is an all-time high. And for those of you who are eagle-eyed, when I was on the Russell, not quite there, but almost an all-time high. So, risk on still seems to be a good player at the moment. Gold looking good. Silver. I mean, if silver isn't acting like an altcoin at the moment, I don't know what is. Moving $4 or $5 every day is pretty amazing. It's not quite all-time high, but $80 an ounce, absolutely unbelievable. Playing flat, and they've had resets. They've had pretty decent resets. Back down to 50 EMAs. All of these. Okay, no, not silver. Of course, silver hasn't, because it's done too good a run. The platinum palladium looking well. Some of the other ones in and around here. TauX, for those of you that are still in it, I am not, but had a nice V-shaped reversal out of this one, so good to see there. MicroStrategy still in a bit of trouble, still in that downtrend. I think this was it 162 was like, maybe we are on course down to that sort of 122. Gets below $100, as I've been saying, might be worth actually picking up some. But some of these ones, I don't really want to delve too much into them. I never do. I appreciate. So just one final thing. Two final things, I suppose. Look, I appreciate today was a little bit different than the usual Tuesday, but we're just getting back into it, not really in the news. And I think let's just get a bit of an outlook on where we are. I do think, let's just have the Bitcoin chart whilst we're talking about this. I do think the last week has been very positive for us. I think the last week has sort of helped at least shake off some concerns that people had going into the end of 2025. But we have to just take that with the caveats of the markets can turn whenever they want to. They don't owe us anything. And so, just keep on going to the markets, keep on going to the charts, whatever you're doing, just evaluating it as you see. Try not to be too greedy. And just know that, market will always give you another opportunity. And with that in mind, I wouldn't necessarily call it a New Year's resolution, but just something that I've decided that I'm going to do. I was chatting with someone else about it today. The reason I mention it is I'll keep on updating people in Discord and probably on the Friday charting things. Is I've sent just $5,000, so not a huge amount, to a brand new perp account, and I'm gonna basically, I'm not gonna be one of these people that do 5K to $1 million, probably because I can't. But I'm actually, I do have other trading accounts. This one, I just want to sort of like, how well can I do? So it's a bit of a competition with myself of just going for really short or small win trades. And I'm kind of looking sort of, hit $200 to $300, and I'll take that as a close it. Let's just win. Let's try and build on that and see how we go, and just keep that target for every single trade, not increasing it in percentage value compared to the trading pot, which hopefully will increase over time, and just see where I end up basically, or whenever I give up, because I always do, give up on the main trading account because I either don't give it the time or whatever, and just see how well, just actually trying to go for smaller, people talk about, and I was listening to some podcast about, New Year's resolutions. They can be difficult if you set yourself massive goals because they can seem hard to achieve and people give up on them. Whereas if you just try and improve on yourself 1% a day, then, you'll be amazed at how that can compound into something. So trying to turn that into sort of a crypto trading related element, I thought, well, if I do, I'll outline it all in the Avengers chat, sort of the rules I'll set myself. I've kind of got them in my head, but effectively, I won't be initially. I've just funded it with 5,000, but I'm not going to put that 5,000 onto my first trade. But I will have to put a decent amount in. It'll be quite a high percentage of that pot to start off with. There's a bit of risk there, certainly low leverage. Trying just to hit those initial targets, $200-$300, whatever it is. Try and do that. The aim is every day to make $200, however many trades it takes. But I'll have to set myself how much I can lose a day before I just go, right, reset. And just try and compound that up. And I think instead of setting myself like $200-$300 a day, maybe just try and set myself $1,000 a week. Try and sort of make, so one, I can take into account some losses. Two, take into account I don't have to be a tape slave over the weekend. And yeah, just run that separately. I'll try and, provide weekly updates of how the pot is doing. But the reason I mention it, the reason I'll post it in there as well is, look, if other people want to do something similar, and I'm not saying follow my trades, I'm not even saying I'm going to post all of my trades. Perhaps we could just start as a little community of just putting out trading ideas and trading setups and just try and get a bit of a flavor, low risk for our relative portfolio size, but just try and actually say, right, instead of swinging for the fences every single time we trade, why don't we just see if we can get some sort of, consistency within that there. And I want to do it as a balance of just how I do with my usual trading pot, which is, higher risk than I probably should, versus just sort of a lower risk, lower time, lower stress, and how does that feel and how does that manifest itself over the time. So I haven't started it yet. I sent the money over today, so I am a few days behind, so obviously it won't be quite 365 days worth of, but it'd be interesting to see if I can keep it going, one, for the full year, and two, how that plays out. So that was just a thought process of what I'm going to plan on doing. As I say, I'll just regularly kind of update where we are. I will post some of the trades that I'm looking at. And, as I say, I really hope that some people are like, oh, yeah, well, I've seen this on Pippin. I can't remember who it was. I think it was Reese that's been trading Pippin for a while. I never even bothered to look at it. Some great opportunities. And there's no set rules. One day it might be I'm doing an RSI or EMAs or vectors or whatever. Doesn't necessarily matter. All I'm trying to do is get in and get out, bank it, and then just, chill for a little bit. So more to come on that one. In terms of everything else, I think we're kind of finished on that. In terms of everything else, we'll have a trading pub on Thursday. We've not had one for 3 weeks, I think. As usual, it'll be good to see how things are updating there. And obviously for me, it's my weekly update on how Alpha is or isn't doing. Friday, now the kids are back at school, we will get back into some charting on Fridays, and then hopefully next Tuesday we'll get more back to a bit more focus on trying to tie in bigger pictures, bigger ideas, bit of news event into the charting as well. Just gives a more broader picture of where things are. But other than that, I just want to say that you know, we got. I mentioned at the beginning, if you're feeling like Jesus, this isn't for me, or wow, I just got my teeth kicked in 2025. Yeah, we all did in certain sense. We were all humbled. Whether even if you made something, you probably thought you were going to make more. I'm sure there were times when we were showing our friends and families our portfolios as it was going well, and towards the end of the year, hoping they wouldn't bring it up at Christmas. So the past is the past. It's done now. Let's just look at 2026 as that opportunity, that brand new year, as I put on the thumbnail, for us to actually try and, whether it is make money, whether it is increase your exposure to Bitcoin or whatever, an amalgamation of the two. We've got that opportunity. And most importantly, we've got each other. We've got that community of like-minded people who kind of trade in a similar style or understand similar metrics. Let's all try and just encourage ourselves to keep going through with that. And maybe something like this, just this small amount of your portfolio, just trading away. One, keeps your instinct sharp, keeps you focused at least on the charts. Even if you're not doing it every day, you're just doing it, you get a bit more time in the charts. You get to feel how the market's moving, which may help you bigger trading pots understand, but actually also just your overall spot portfolio kind of give you a feel of where that is instead of just waiting to be told what to do. Anyway, so that's kind of it from me. All I've got to say now, enjoy the rest of your week, enjoy the rest of your evening and your week. I will see you all on Thursday and on Friday. And other than that, speak to you all soon. Cheers now.